What's going on, guys? Bexio back, and today we got a brand new video. We thought that we were in the clear yesterday. All these negative catalysts were taken care of. Nothing till the end of the year was supposed to be going wrong. And just as we thought that happened, the Bank of England hits and raises their interest rates and throws a wrench in everything. You can see this is the S&P 500. This was yesterday, massive gains and coming back down already. So seeing a lot of things change very quickly off just this news. We basically had only global news could disrupt anything, because anything in the US was kind of taken care of. Everything went as expected with Jerome Powell and the Fed meeting. And now we have this where the Bank of England comes out and has to raise interest rates, and they do it immediately. And now we see a lot more global kind of fear kicking in. And you can see across this whole thing, lots of red mixed in. Just this, how the Bank of England's acting is how people might think the Fed is going to act, and seeing if they might raise interest rates sooner. I don't see that happening. I think the paper is going to finish, and then they'll raise interest rates, and they'll probably do it immediately. But that's what's expected, so it shouldn't come as any surprise. But a lot of these things acting off of this news, even Bitcoin getting a little volatile, not seeing massive moves, about a 1% down. So nothing crazy, but for Bitcoin breaking out of this channel, still looking good. And honestly, looks pretty all right. Even the S&P 500 looks fine. You know, this dip is whatever, this downturn, nothing crazy. But this is the news here. Interest rates rise for the first time in 3 years for the Bank of England. You can see they the increase to 0.25% from 0.1%, following data this week that showed prices climbing at the fastest pace for 10 years. That was the 10-year inflation the Bank of England had. They at the 10-year peaks, US is at 40-year peaks, the Bank of England at 10-year peak. So they are acting very, very quick about this, and they come out and said that this seems like it could be a massive problem if they don't do something about it. So the bank governor, Andrew Bailey, said it needed to tackle strong inflationary pressures building up in the economy, and inflation is now running at 5.1%, the highest in a decade, and he expects it to rise further early next year. So, but this kind of goes against Jerome Powell a little bit. We can see on the Federal Reserve stuff here, the PCI inflation, basically inflation data projections, similar to CPI. You know, they even next year think that it's going to be up from even what they projected before. But for the Bank of England saying it's going to be expected to rise further early next year, the Fed, the Jerome Powell, and the U.S. Central Bank is saying that, you know, they think inflation is going to be cut in half pretty much from where it was, or where they projected it, even where it's going to be. So they think inflation is going to cut in half. And this, the Bank of England, or yeah, the Central Bank of England, he is saying that they think it's going to rise early next year. So probably for the next few months into 2022, probably the first quarter, they expect higher inflation. And I think Jerome Powell kind of went on that and was kind of saying that we might see that for the early months of next year, but they still are projecting inflation overall to pretty much be cut in half. And I think even saying in the short term, that is the next 2 to 3 months, so basically the first quarter of next year, we think we can get around 6%, telling the BBC. So that's 6% in the pounds rate. So it's, you can't compare it directly to the dollar because of how all these versions and different they are, but increasing inflation, thinking that it's going to increase as well in the short term. And just this chart alone is kind of insane. You see, before the 2008 crisis hit globally, but never since 2008. Looking at these rates for the pound and stuff for Bank of England, never has it gotten back to 1%. And before that, it was around 5% was this average, even getting up to close to 6% in this plummet, and just never returning there. So that's kind of the world where I think we're really moving towards in the longer term horizon, where these interest rates, they are not going to be able to rise them for long periods of time. They're going to have to keep them low and keep debt easy to get, especially for the U.S. with the massive debt that the U.S. has, that they are just going to have to keep interest rates low to keep that going and to keep the economy churning. The more quantitative easing that goes into a system, the more the system becomes dependent on it for this kind of growth. And we do see that England and Europe doesn't really grow at the pace the US does because the US uses all this debt and easy kind of money to go out and grow the economy. So it comes with a trade-off there, but interest rates, will we ever see 5% or something like that again? Probably never. And just looking at this, like comparing the Bank of England kind of talking about them seeing inflation being a problem and having to combat it right now, even for the Fed, they're still shrugging it off, still kind of saying inflation doesn't look like it's a big problem. They upped all their projections except for obviously 2024, and then even long run, they're still saying just a flat 2%. So we'll see how right they can be. They prove that they're not very good at being right when it comes to this types of stuff. But looking at the market as well, they're seeing S&P 500 not reacting good. The broader market, I mean, same thing, kind of, still not reacting good. Big tech names like Apple down 3.8%. That's a big move for Apple. You can see well under its all-time high now of 182, up $10 under. So that alone's a big move for Apple. Tesla's down 4.4%. Channel favorite Plug is down 5%. But kind of zoom in a little bit on Plug just quickly. It does kind of look like confirming its little breakout here, maybe from this downtrend. So we'll keep an eye on that, see how it's going out. So overall, nothing crazy, nothing really bad happening in Plug, but these global kind of macro things going on in the market affecting all these companies. Even Bitcoin, even Ethereum is actually up for the day, 0.5%, 0.6%. But everything gets affected from these because it affects how money flows and how easy debt is to get. So the biggest companies that are going to be affected from rate hikes and things like this, obviously the broader market short term probably won't be happy with this types of news and things going on. But, things like Apple, they're not going to have to worry. Plug would be affected by this because they're losing money trying to grow and stuff, but they have lots of cash on hand to be able to fight this. You look at their balance sheet, they're good to go. These big companies that have margins will be all right. Companies that are in growth companies right now, and even things like Carnival, who's been trying to use debt to kind of stay afloat. All of these different companies, they look like they might be in trouble. Any company that's relying on debt right now to continue operating and growing is going to be in trouble if and when interest rates get hiked up. So we thought we were out of the woods yesterday with that meeting out of the way. Markets rallied, love what was saying on, and then we get hit with this global kind of issue here with the Bank of England immediately raising interest rates and putting that little bit more fear back into the market. But the dip that keeps on dipping, so we'll see how it all happens. I don't think it's a big deal. Probably a lot of overreacting going on. But as always, guys, don't forget to smash that like button and subscribe. We are on the road to 1,000 subscribers. See you guys in my next video.